Good Monday morning. This is Drew Wright. Today I am lucky enough to have Clark Twitty here in the audience. And of course, I've got my son, Alex. We do videos every Monday, bringing you information about mortgage financing, the real estate market on the Outer Banks, any topic we can try to think of. And we thought it would be a really great idea to bring in Clark Twitty, who has been on the Outer Banks, and the Twitty name has been here for what, 50 years?
Almost 50.
Almost 50 years. I know that his dad, Doug, was one of my first clients when I got into banking. I wasn't a mortgage guy at the time. One of the first people I went and saw was Doug Twitty. I lent him some money on a spec house. And from there, we just did tons of business with him and his fellow agents there at Twitty. We've always had a great working relationship with him. So we thought we would bring Clark in today to sort of talk about the real estate market and rents in particular, because that's what Twitty does. They're one of the best property management companies on the Outer Banks. And we get specific questions. And so we thought we'd put a specific question to you and try to give our borrowers, our customers, everybody who watches this, some information about property management. But one of the questions that I had just this week, a customer's looking at buying a house, hopefully every week. And, they're thinking, here it is, it's January. I don't have any rents coming in here in January. If I buy the house and close right away in late January or early February, I'm not gonna have money to make payments. And I'm thinking, well, this house has been on the property management agreement with Twitty. It's got pre-bookings on it that people can do these. When people leave and they've stayed in the house, they love it. They can make these like small deposits. And then there's money collected later in the fall. When does this money go to the buyer? When are they going to be able to actually get some of this money to start making payments? Because they feel like there's a gap in there. They're like, I don't want to close till April or May.
What a great question. And Drew and Alex, thank you for the opportunity to be here today. I have unlimited respect for the work you do and your knowledge and insight, particularly around markets and rates. I think is fantastic. You raise a great question. And as much as I want to be able to offer a 5-second direct answer, the real component is every situation is unique.
Right.
So let's broaden up for a moment. Real estate in North Carolina is a regulated industry, as you know, which means it might be different than Virginia or Pennsylvania or Florida or Georgia. So what works in Florida is different in North Carolina. And then we get into North Carolina and we look at, for example, the real estate community, of which Twitty and Company and our worthy competitors are members of. And then there's organizations like Airbnb and Vrbo. Believe it or not, there's a regulatory difference there. So I'll save that for another conversation. The real estate community, Twitty and Company and our competitors, abide by something called the Vacation Rental Act, which is relatively unique in America. Now, the punchline there is we are able to distribute on behalf of guests revenue for that calendar year of occupancy in January of the year of occupancy. Now, those funds are still in trust on behalf of a guest that has not arrived yet. They don't become the homeowners technically by law until the occupancy has been completed. Now, that was a mouthful. Let me say that a little more directly. You get about 50% of all revenue booked for the calendar year in January. And there is the Vacation Rental Act that says a new transaction has to honor vacation rental activity for 180 days. I know you gentlemen know a lot more about that than I do.
Which comes back for, like, if you sold the property, those rents are honored to the buyer.
They can't kick the renter out.
Exactly right. So sometimes when we think about
protecting the renter.
Exactly right. So sometimes you think if I buy it.
If a house rents for, say, $10,000 a week, it's got 10 weeks booked on at this point. So it's January. Somebody buys a house. When do they get any of those? The money was never given to the seller because he didn't close until January.
Exactly right. They should broadly, every situation different, get that roughly in the first half of January, depending on a couple different variables. 50% of those proceeds, the remaining 50% is typically 30 days prior to occupancy, which I would point out to an owner as a distinct advantage. The real question we're talking about is whose money is it when? And we believe the regulatory framework in North Carolina is an advantage to an owner But the foot stomper takeaway is it is still held in trust on behalf of a guest until that occupancy is concluded.
Right. So it has to take place.
Exactly right. So you may get money in January in advance of a stay. In theory, don't go spend that money. If you get into a refund situation, which as you gentlemen remember was very real when the bridge closed, that money needs to be available to refund to those guests.
Right. The owners are responsible to pay it back to the guest.
Very clearly.
If they sell the property, they've got to give it to the buyer.
Absolutely.
Right.
North Carolina law is crystal clear on that
Right.
topic.
And the other thing is so it's a $10,000 a week. There were 10 weeks collected. That's $100,000.
100 grand.
So only 30% would have been collected.
30% would have been
Collected through.
It will depend a little bit. I have to be careful here. I don't want to make a blanket statement because there are several different approaches to that. So let's use your example, $10,000 a week, 10 weeks, $100,000. Let's say those reservations have been made. $50,000 of that money can be advanced to a homeowner from the property manager in January in the year of occupancy. So if you're arriving in August of 2025,
Right.
you can get 50% of that in January
50%.
if the reservation has occurred already.
But you do collect some of your fee for that.
Yes,
period.
indeed. The North Carolina real estate law is clear. Commission is earned at the time of booking.
Okay.
In North Carolina
Okay.
for property managers. Now, property managers have historically chosen in some cases to interpret that differently relative to the relationship with the client, but the law is clear, commission earned at the
So
time.
it's really
of booking.
net of your
Of his
your
commission.
your
Equals
commission,
what he's commissioned.
which could be anywhere from I don't know what they range to.
I think broadly it's 10 to 20%,
Okay.
somewhere
Yeah,
across
right.
that board.
Right.
And sometimes you'll hear that described as a take rate. Obviously, I tend to prefer a different language use there. Co-mission, together, mission, purpose, things we do together. I
Right.
think that's more accurate.
Good.
But having said that, I've heard the term take rate. too.
So I just want to go down the rabbit hole just a little bit further. So
Please.
$100,000, 10 weeks booked, 50% is collected, and it's paid in January. So $50,000, let's say, is collected for that homeowner currently, and it would be paid in January.
Yes,
Correct.
correct.
So once it's paid in January, let's say we have a buyer that comes along and says, I'm ready to purchase the house and go under contract sometime in February. So they go under contract in February, they own the house in March. There's no rents that have occurred yet. Technically, no rents have been
True.
occupied, but there's that $50,000 that was paid to the seller of that home. So walk me through how the buyer would obtain those remaining funds or funds being booked.
I'm going to give my obligatory disclosure here. Talk with your real estate attorney, talk with your property manager, talk with your tax preparer. Let me say that clearly because that's to the advantage of your clients.
It is, absolutely.
Generally speaking, I would say that the question becomes whose money is it when? So if that seller in January has that money, it is not their money yet. Going back to it's not theirs until
They're really holding
occupancy
it in
is completed.
trust.
You're exactly right. Those trust funds have to be transferred to the new buyer.
New buyer. So even though they could get the 50 grand in January because they sold it in February, it's going back to the buyer.
Because it's not their money.
Right.
Those funds are held in trust on
Right.
behalf of that guest, and that's
Well,
very important.
I think this is really good because I think this will really help buyers
Exactly.
understand when they're going to get their money. They can feel better about it, honestly, because this gentleman I talked to just yesterday was like, well, we want to delay the closing as long as possible because we're not going to get any money. And I said, I don't really think that's going to be the case. I think you're going to get some of these deposits or these what I call 250 deposits are made in July or August when people say, I really love this place. I want to come back. It's a non-binding agreement. Then later in the fall, a portion's paid, half of it. And that portion you're going to be entitled to minus the commission that the property manager charges, anywhere from 10, 15, or maybe a little higher. And so that's a significant benefit or also a reason not to delay closing. So
I would say, said a little bit differently, yes, I would encourage any potential buyer or seller as they work with their chosen professional, make sure that what is trust accounting and what does that mean to me? And always diligence around the regulatory environment in North Carolina known as the Vacation Rental Act.
Right.
Just because we may be an expert at transactions like this in New Jersey or Florida, it is not the same in North Carolina.
Alice, I think you wanted to make one last comment before we wrap it up.
Yeah, so I'm going to go probably a little bit longer here, but I have a little bit of experience or hear a lot of feedback because my sister-in-law actually works for Twitty, and she's a vacation specialist. And so she's constantly helping with bookings or any type of just maintenance of questions about the home during their stay. So I get a lot of feedback from her of what it's like to rent a property from Twitty. And one of the things that I know, because I've had other family members rent property from Twitty, is that it's super easy to use the website. You can see the homes, I think, like what's to offer when you stay there really easily. My question really is like because I talk to current homeowners that are thinking about selling their properties. They're like, man, I have the same person booking this home for 5 years. Or again and again and again. And it kind of goes back to the person buying the home, these rents being booked in advance. So I just want to talk a minute about how early do people book in advance and that type of thing.
What a great question. And the name of the game in the vacation rental industry broadly is days in advance. That's a key performance indicator for any company. Now, the spoiler alert is it changes drastically based on the destination. There are some destinations, ski for example, that may book 30, 60, 90 days in advance. The Outer Banks is famous for booking well in advance as a general rule, depending on market cohort and market segment. And we can talk more about that. In many cases, you can book a rental home 364 days in advance. Mm-hmm. And on a much smaller number, we can book homes years in advance.
Oh, really?
So that's important to think about. One more differentiating concept for a North Carolina Outer Banks investment. Days in advance is a very important number. If we translate that, it's annually recurring revenue.
Right.
That's a very
gives you
important
much more
metric.
security.
So
absolutely.
If you love this house and your whole family wants to come here every year and it, but without a shadow of a doubt, you want to come July 4th weekend, you're going to rent a home that can basically fit 20 people and you want to rent it for the next 5 years because you're that committed. Can you do that? Can you set it up? How early in advance can you book it? I'm just generally curious.
On a very limited basis, you can make reservations. Now, again, as much as I want to give a soundbite, it depends on the homeowner and the price upon which they determine to sell that week far into the future.
Right.
Costs are unknown.
So you might go to a homeowner and say, this guest is really loving your house. He wants to come every year. They love it. And they're doing these great things on the Outer Banks. They want a 5-year commitment. And you'd go to that homeowner and ask if he wanted to do it.
If they wanted to do it and at what price point. North Carolina law, there's no contract without a price.
Right. Mm-hmm.
We have to have a price for that. We can make tentative holds subsequent to pricing based on supply and demand, which is very interesting. But price is very relevant there. Is it going to go up? Is it going to go down? We often don't know that until we get much more timely market information.
Okay.
Cool.
Gotcha. Well, listen, I just want to thank you, Clark.
Thank you.
For being here today. I think this is good information for buyers, for people looking to invest on the Outer Banks. We would encourage people to use Clark as a resource. We're certainly available and hope you give us a call. Thanks for listening and watching today.